Well, today I have with me Bob Cron, our investment director on a private wealth business. And Bob is here to talk to us a little bit about risk parameters and portfolios. I understand there's been kind of a lot of change in the last 12 months in risk parameters. Tell me a little bit about the environment.
Absolutely, Dan. About 18 months ago, the Fed started raising interest rates, and from virtually a zero Fed funds rate up to 5.5% today, and that made fixed income assets very attractive.
Wonderful. And so when you look at fixed income assets, there's a tax overlay that can be made, particularly in the municipal side. Have we seen advantages for Minnesota residents with that?
Yeah, most states offer tax exempt bonds that are both exempt from federal and state income tax. Minnesota is one of them on the tax exempt status. And Minnesota residents do pay a very high state income tax if they're in a high tax bracket. And collectively, it's about a 40% discount to be in tax exempt bonds. So it's very attractive for a Minnesota resident.
So if you take someone who had, 100% equity portfolio a couple of years ago, maybe you infuse, tax exempt bonds for a Minnesota resident, they get the tax advantages, but they also end up with pretty significantly reduced risk parameters.
Yeah, since bonds, interest rates were 2.5% for a number of years, and now you can get, 3, 4, 4.5%, and high grade quality municipals. Their tax equivalent yield is in the upper 5, 6, lower 6% range.
So tax advantages, lower risk, but maybe some of the same, net return or even potentially better net return with less risk by reallocating portfolios to achieve those results.
Yes, absolutely. You're able to get that equivalent yield or return for a client with much less risk today than you could just 18 months ago.
Wonderful. If you want to learn more, reach out to abbeystreet.com or any of us at Abbey Street for help. Thanks so much.